Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. We're here at VRIC in Vancouver, and I'm sitting down with Michael Stier, CEO of Saga Metals.
Thanks for having me.
Good to have you, Michael. So let's start off our conversation with just provide an overview. You've done completed your IPO in September 2024. And for those not familiar yet with your company, could you provide a little bit of an overview and why investors should pay attention?
Yeah, absolutely. So we completed our initial public offering on the TSX Venture under the symbol Saga, SAGA, back on September 23rd. We're a diversified critical mineral company. We've got 4 properties, 1 in James Bay, Quebec, and 3 in Labrador. I think the thing that sets us apart is, we have a broad opportunity for people to have access to different projects in different mineral spaces, as opposed to being segmented and just going after uranium or just going after lithium. And, I was kind of explaining this to someone else that I think it's an advantage for shareholders in value creation, because we're trying to create this model of finding grassroots projects and moving them through the development stage. And so rather than being pigeonholed into one specific sector or industry within mining, having access and being able to move different minerals forward, especially in the critical mineral space, it just creates more opportunity for everybody.
And I think one compelling, most interesting aspect of the business is your joint venture option agreement with Rio Tinto. Could you tell us a bit more about that and why that's a significant partnership?
Yeah, absolutely. That's an agreement that we completed back in June of last year while we were a private company. I think it's important for a multitude of reasons. One, it obviously helps us advance that project in James Bay in the lithium space while we focus on advancing some of our Labrador projects. I think the other thing too is that it adds a bit of credibility from management side as a private company and as a young company to be able to find quality grassroots projects and have a big company like Rio Tinto see that and see the value in the ground that we were able to claim and the work that we were able to do it in a season. And it's a 2-stage option earn-in agreement. So within the first 4 years, they have to spend just under $10 million to earn 51% of that project. And then they have to spend just over $34 million additionally over a 5-year extended period of time to earn up to 75%. So it could be quite significant in terms of advancing that project and, again, creating value for our shareholders.
Maybe it's a good time to maybe provide an overview of your portfolio, your project portfolio. Just give us some, brief details about each and what makes them compelling.
Yeah, absolutely. So I guess I'll start in the westernmost property, which would be James Bay and our lithium assets. So in that region, we have 65,000 hectares. About 34,000 is optioned to Rio Tinto. And then the other 31,000, which is all contiguous with each other, is called our Amaro project. And we own 100% of the 65,000. Obviously, Rio Tinto is the operator of that project. And the Amaro project will advance forward ourselves at this time. The most compelling aspect about that is that it's in the furthermost eastern part of James Bay, and it follows the striking paradise that comes down from Winsome's Adina project, which is found in the Greenstone, which initially in James Bay, that's kind of where most people were finding and having success in lithium. But more recently, in the last 12 to 18 months, people have been having a lot of success, especially loyal lithium, in the paradise. And so we've got over 100 kilometers of striking paradise through that 65,000 hectares. And so again, from a grassroots project, it's pretty compelling in terms of what we have on our ground to kind of create that incentive to go put some money into that project and find out what's really going on beneath the surface. Then as we move east, we've got our Northwind iron ore project, again, being diversified. It's up near in the Shufferville area. It's on the Labrador side. We're contiguous to LabX and LabMeg Technologies. For us, again, that's one that we'll move through slowly. It's a secondary project. We spent about $50,000 on the property and claims maintenance this past year. But honestly, it came out staggering with some great surface sample results. Like we had up to almost 85% iron oxide, which from our perspective was not something we were even expecting. The previous work that had been done on it, which was about 8 drill holes, had an average grade of around 24%. And so, yes, these are surface samples, not drill holes, but again, it just kind of points to maybe something bigger that's going on in that area. And that sort of contiguous trend with those other companies, they had not gone sort of further south and a bit to the east of that trend. And so it kind of opens up that whole corridor to that side. Then moving even further east towards the coast of Labrador, we've got our double mirrored uranium project and our radar titanium vanadium project. And so those are the two projects that we're going to get into heavy in terms of drill programs here starting in Q1 2025.
So yeah, let's expound on that. Like what are your plans for the coming year? What's going to make you busy then?
Yeah, so we're hoping that 2025 is going to be a major year in terms of just continuous drill programs. We'll set out with our Maiden program on both those projects, the double mirror uranium project and the radar titanium vanadium project, approximately 1,500 meters on both. The strategic advantage here is that the radar titanium vanadium project, being just south of Cartwright, has road access. So we have road access heading right into our highest mineralized zone, which is the Hawkeye zone on that project. And so with the drilling contractor coming up from Newfoundland up through the south part of Labrador, they essentially have to pass right by our radar project to get to Goose Bay and get to our uranium project. And so for us, it's actually a huge cost savings event to have them come out, sort of stop at our radar project for a couple of weeks and drill about 1,500 meters on that project, and we can really test what's going on there. If you check out one of our more recent news releases, it was within the last couple of weeks, we did one on a magnetic inversion that we did on the recent geophysics, and it paints a pretty compelling picture as to what's going on below the surface in terms of having about 250 to 300 meter width of a magnetic survey at almost 600 meters below the surface. And it only gets better as you get closer to the surface in terms of being 200 meters down. It's looking at upwards of about 1 kilometer in width. And so that recent work that we did on geophysics has really delineated exactly where we want to put these drill holes. And we're quite excited that that's going to give us the results that we need to, again, get into further programs and drilling in this year. And then simultaneously, we're going to have a crew out at the Double Mirror camp, just fixing up the camp, putting in some stoves and things like that for the winter drill program. We do have to helicopter into that one. Again, benefit for us on that project is that the previous custodian of that project back in 2006, Silver Spruce, spent about $3 to $4 million on that project in terms of advancing it. That's when that big uranium rush happened in Labrador. And so we benefit from not only the uranium count radiometrics highlighting an 18-kilometer trend, but we benefit from the surface samples that flow all along that 18-kilometer trend. A camp that probably cost a few $100,000 to put in. It's going to take a fraction of that for us to upgrade it, put in the necessary stoves for heating and just some of the plumbing and fixing up the kitchen. But it's going to be perfect for the drilling contractors and some of our team members that will be there to help advance that project. We're going to drill initially the Luvic zone, which is the most western extent of the 18 kilometers. It's about 1 kilometer from our camp. So again, the benefit there is that you're not relying on a helicopter to take the team to and from. Helicopter usage will just be to move the drill itself. But the team can use snowmobiles to run between camp and site to drill. And so, sometimes drilling can not be as cost effective in the winter months. But for us, given the strategic location of the camp and just some of the cost savings that we have in terms of drilling both projects at not same time, but very closely overlap together, it makes sense to start in the Luvic zone. It is a very promising zone along this 18-kilometer trend. And then our hope, obviously, is that we can get the necessary data out of that program and then go back in the spring and summer with continued drill programs, not only to further drill out the Livic zone, but also to get into the other remaining 18 kilometers of the trend that runs to the east side of the property.
Are you anticipating, given the work that you're going to be doing for your uranium project, and uranium in general, and has had some positive performance, and then do you anticipate sort of like this optimism in the uranium market continuing and giving more excitement around your project?
Yeah, 100%. I mean, as I mentioned, I believe last time on our chat, you've got major companies, Amazon, Microsoft, Google, they're all pouring millions, billions of dollars into the uranium space, creating major partnerships, bringing back old nuclear power plants online. You've got this massive data center push and just AI technology and everything that it's not going anywhere. And these companies need sustainable, clean energy to be able to move those over. They require massive amounts of power, and nuclear is essentially your cleanest. I think technology nowadays has gotten far superior in terms of what it was decades ago. I think the fear and stigma around nuclear is starting to subside from that perspective. You've got small modular reactor technology, things that are coming online. You've got communities even like where we are in Labrador and northern communities within Quebec that still rely on diesel generators. I mean, one day our hope is that you're going to start to see these small modular reactors in those areas, and these companies don't have to be beholden to these major oil corporations for running diesel and running their communities. They can rely on something like nuclear power and uranium right from maybe their own province, as an example. So I think there's lots of opportunities, and I think you're going to see that squeeze and that change in supply and demand kind of continue to progress as even throughout 2025, and we should see a price shift in that same time period.
We'll leave it at that. Thanks again, Michael, for taking the time to speak with me today.
Absolutely. Thanks so much for having me.
Thank you. And thanks, everyone, for watching. Join us again next time for another edition of CEO Insights. If you like this video, like or leave a comment below. We'd love to hear from you. And if you haven't already done so, subscribe to our YouTube channel for more exclusive interviews and updates.